Hello traders, the title of the video is how to deal with Elliott wave violation with a cool head. Alright, sometimes you come across a situation where the Elliott wave violation will become a little bit annoying. You may be wondering, should I take it, or should I leave it, or should I discount it? Should I put a question mark on it? What exactly is taking place? And that can also affect traders. So how do you deal with Elliott wave violations with cool head when those violations are a little bit annoying? All right. So we have one situation here. That's why I'm recording this video today. My intention is to keep it very short. Hopefully, I will do that. Okay. So we see here. So a lot of traders, when you see here, you say, okay, impulse wave. So trending first. All right. So most traders, as they're doing their preliminary week on, they say, okay, first wave, okay? Everybody agrees, so they will say first wave. Well, okay, everybody will say that, okay? They will say this is the first wave on the monthly chart, or then they will say here, second wave. Good. And then we come here, we say, all right, probably this is the third wave, all right? So don't rush into a quick conclusion, because this is an exercise that we are doing. Don't say that it's wrong yet, okay? Wait until we do what we want to do, and then now you will see, all right? So then another may say, oh, fourth wave, okay? So they just keep doing it like this, all right, like a little child. And then you say, all right, fifth wave, all right? And then they will say, all right, probably this is a flat correction that is beginning here, all right? Now, but then after you do that, you want to check whether there are Elliott wave violations. The first one that we see here is that the fourth wave is overlapping the first wave. It shouldn't come into the section. This is the section of the first wave, yes or no? Okay, this is section, you see? The range of that first wave. And the fourth wave should not come into that range. So we see the first Elliott wave violation, and we are wondering, okay, what's happening now? Where is, all right, that rear third wave? All right, so we know now that this is not the fourth wave, because we see an Elliott wave violation, so we remove that. All right. Another thing that we check, all right, practically Elliott wave trading, is that what I recommend to traders, all right, is that whenever you call something like this first wave, and you have to apply Fibonacci extension to that first wave on any time frame, all right, and you want to make sure that the third wave goes above, all right, the 138.2% Fibonacci extension of that supposed to be the first wave. So this is another thing that is giving me a little bit of, that is annoying me, because now we see a violation. Now this is not supposed to be a third Elliott wave in my view, because if I'm calling something third wave, it must break this resistance at 138.2% Fibonacci extension level of the first wave. So where is that third wave? I'm getting a bit annoyed now, you understand? Should I keep quiet, or should I stay cool? All right, we are talking about, all right, how to deal with Elliott wave violation with cool head. So I'll stay cool, all right? So then we say, okay, probably this is the third wave. All right, so now that third wave go to 161.8% Fibonacci extension level, all right, of the first wave. So it goes to 161.8%. So now, is this move, all right? I'm trying to stay calm, all right? Very calm and cool-headed trader. It is the third wave. Are you convinced that this is the third wave? I'm not satisfied, personally speaking. I'm not satisfied with that, calling that third wave. So where is that third wave? So since 2000, is there any more a trend? The market has been going up. This stock that we are analyzing is Procter and Gamble. By the way, don't gamble with the Elliott wave theory. though we are talking about Procter and Gamble. It's an American company that belongs to the consumer defensive sector, EPIC PG, Papa Golf. Looking at this structure here, is that the third way? You'll be amazed. Some traders will say that this is the third way, but personally speaking, I won't call this third way. It looks so messy for me. It doesn't look so very, very gorgeous. And this is why we are talking about how to deal with Elliott wave violation with a cool head. See now? But some traders will say, all right, this is the first manual wave of that third wave. From here to here, George. That's the second manual wave of that third wave. And this is the third manual wave of that third wave. And here we have, all right, the fourth manual wave of that third wave. And this is the fifth manual wave of that third wave. What are you going to do about that? Well, some trader will say that. So what are you going to do about it? Whether you accept it or you disagree with it, what are you going to think of? So those traders will say, George, all right, you stupid boy. This is the fourth wave. And they will say, all right, you see now, George, it's becoming clear now. It's the fifth wave. But in my mind, I won't call it that thing third wave. All right? I won't call it a third wave. Though it went to 161.8% level. You see, it went there. All right? So they are pushing it either way. But sometimes, those that are calling this third wave may be right because of the characteristic of the financial instrument that we are trading. So what you need to understand that some stocks are messy. This is one example here. You see, so every time it goes out, see how it comes down. Down, sharp correction. Here again, it went up. What do we expect? Down. You see that? Then it went up again. How did it come down? Down. Then it went up again. What do you see? Down. Those type of stocks can mix up Elliott wave structure. All right, can mix up Elliott wave structure, and it can give a lot of headache to Elliott wave traders, which means you won't be able to make sense of okay, where is the third wave, where is the fourth wave, because of how the financial instrument is behaving. All right, but in that scenario, you can go into the mind of other traders. And you may decide, okay, which way to go. But at the end of the day, what I say to traders, if you are not satisfied about the wave count, what do? Go back to the price action. So this is one example here. So in my view, talking about myself, all right? Not you, all right? Okay, can I talk about myself? Okay, yes. So about your own trading style, you will go with that, okay? So here we are. I am in a situation where I'm not happy with all these things people are calling fourth and third wave, but I am aware of it. What exactly is taking place here? If you ask me, you say, Joe, what is your view? I'll say that, you see all this move here, blah, 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 blah. It looks to me like an extended correction because the price is just consolidating. So I will say this one fast wave, and I will call all this blah, 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 blah so far. I may be wrong though, yeah, I may be wrong, because as a second wave, is that a messy second wave? A second wave going above the first? It's a consolidation, yes or no? No one can deny that it is a consolidation, and no one can deny it. Are you denying it? Let me know in the comment section, so we can ban you from this channel. No, this is to laugh. All right? This to we're not going to ban you for that. All right. It's a consolidation, yes or no? So the price oscillating between those two key levels. Since that trending file, it is going up though. It is going up. It is just consolidating. So with that in mind, all right, what do we say to traders? We say to traders that, okay, if you come across stocks like this with a kind of a volatile attitude, all right, and you see a lot of Elliott wave violation, the best way to deal with those Elliott wave violation with a cool head is to work with the market patterns. So everybody will agree that people are selling at the top here. That's what they're doing. You see that? They showed it here. But they showed it here. Recently, they showed it here. So one can extend that channel and do exactly what they are doing, because the market pattern, not the Elliott wave pattern, but the market pattern, rising channel, declining channel, horizontal channel, triangle, will determine the appropriate strategy that we must deploy. And below, they are buying here, they have bought it here, they bought it here, this tail came here, they bought it here. They are buying along the lower part of that rising channel. Will that be helpful? Will that cool ourselves down a bit? Yes, it will cool you down, because now, because you get confused, you are not very sure, what do? You work with something that is true. What is true? The market patterns are true and market stable data, and you can work with that. And with that, you know that, okay, the only time we will see a strong bullish move is when it goes above. So you are using the Elliott wave to make a forecast. You can also set a target using market geometry. So if it goes above it, you can tell your client that this stock is a little bit messy now. We can't tell where is the head, where is the tail, using the Elliott wave principle. It's a bit annoying chart, all right? But all we can say to you at this junction is that it's now consolidating, all right, in a rising channel. Personally, talking about my own trading style, all right, it looks to me that probably this is a funny second wave or something else that no one knows. And this is it. You can't lie about it. You are not very sure. You just say it as it is. All right. So if it goes above that channel, or the red channel, we project it up in the direction of the price. Now we want to watch the median line of that projected channel, yes or no. That's what we will say to traders. That will be a reasonable thing to say, yes or no. Instead of saying, oh, this is the third way, this is the fourth way, and then we are completely wrong. Because when there is an uncertainty, we want to work with something that is reliable. Where there is a confusion, you look for something that is true. And from that thing that is true, you start figuring out what is likely to take place. That's it. All right? So you see now? So that's all we can say now. Is this the second wave? Crazy. Is this the end of that third wave, as other traders were saying? All right? Is this the fourth wave? Is this the fifth wave? Not very clear. Yes or no? Not very clear. You're just going like this, up like this. All right? So this is how to deal with Elliott wave violation with a cool head. If you have any question or suggestion, please put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to deal with Elliott wave violation with a cool head. If this video has been truly useful to you, please let me know by giving us your beautiful thumbs up. If you dislike it, be sure to mark it down. However, if you think this is an essential tutorial that can help other Elliott wave traders, feel free to share it on Tumblr, Google+, Twitter, and also on Facebook. So this will conclude our discussion today about how to deal with Elliott wave violation with a cool head. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. Our channel is 24 Elliott Waves YouTube channel. If you are watching this on Facebook, all right, our Facebook page is Stochastic-MACD. If you are watching this on YouTube, our YouTube channel is 24 Elliott Waves YouTube channel. For those of you who are interested in high probability trading setup, I highly recommend the Trade Idea trading software. I'll put the link in the description section for you. Happy trading to you all, and I will speak to you soon. Thank you for watching. Did I keep it short? Or I was thinking to keep it to 10 minutes, but my apologies, traders. 50 minutes, that's a long time in the life of technical traders. Thank you for watching.